All right, let's dive in. Today, we're tackling the 2026 Union Budget. Now, you know how these things go, right? It's the government's big economic plan for the year, but trying to understand it can feel like you're trying to crack some kind of secret code. Well, that's exactly what we're going to do today. We're decoding it together. So, get this. The second the finance minister wrapped up her speech, the stock market just tanked. We're talking a 2.5% drop just like that. That's not just a dip, that's a clear signal that investors were seriously worried. It was, honestly, a pretty dramatic way to kick off this whole story. And that immediate reaction, that market plunge, it really sets up the two big questions we have to answer. First off, what's actually in this budget? And maybe more importantly, what was it that gave investors such a cold shoulder? Let's get into it. Okay, so to really get a handle on this budget, you've got to understand the thinking behind it. The government has basically built their entire plan around this central idea, a theme they're calling the three duties. Yup, these three core duties, or kartavyas in the official language, are the foundation for everything else. You can really think of them as the three main pillars holding up the whole structure. Every single decision, whether it's about taxes or building a new highway, it all connects back to one of these pillars. So what are they? Well, the first one is all about hitting the gas on economic growth, making our economy strong enough to handle whatever the world throws at us. The second duty is about helping people achieve their dreams, through better education and more jobs. And the third one is what they call inclusive development, which is just a way of saying they want to make sure everyone, every family, and every community gets a piece of the pie. All right, so that's the high-level philosophy, the big picture stuff. But let's be real, you're probably wondering, okay, but what does this mean for me, for my wallet? So let's zoom in on the changes that are going to hit you right at home. And this first one, it's a really big deal. They're rolling out a completely new Income Tax Act, which is set to take effect on April 1st, 2026. The promise here is all about making things simpler, easier rules, simpler forms. But make no mistake, this isn't just a tweak, it's a total overhaul of how personal taxes work in this country. The budget also has some good news in the form of direct tax relief. So for example, if you ever buy things from other countries for yourself, the customs duty is getting sliced in half, dropping from 20% all the way down to 10%. And if you're planning an overseas trip or sending money for things like education or medical care abroad, that tax collected at source, the TCS, is being brought down to a simple, flat 2%. Okay, so we've talked about personal finances. Now let's switch gears and look at the business side of things. It's really clear that a huge focus of this budget is on what many call the backbone of the economy: small and medium businesses, or SMEs, and of course, startups. And they're not just talking a big game, they're putting serious cash behind it. We're talking about a 10,000 crore rupee fund just for SME growth. The whole idea is to create what they're calling future champions, to find those promising small businesses and give them the fuel they need to grow. But that's not all. You know how small businesses always struggle with getting paid on time? Well, to fix that, government companies are now required to use this platform called Treads to pay their vendors. It's a huge deal for cash flow. Then there's this new idea of corporate mitras, basically affordable experts to help small guys navigate all the complicated legal stuff. And for the bigger fish, the large corporations, there's a small break too. The minimum alternate tax is getting a little trim from 15 to 14%. All right, so beyond just helping out today's businesses, this budget is really trying to look way down the road. It's about making these massive long-term bets on the country's future, especially when it comes to infrastructure and other really important strategic sectors. I mean, just look at that number, 12.2 lakh crore rupees. That's a record amount set aside for public capital expenditure, or CAPEX, as you'll hear it called. And what is that? Well, that's the money the government is spending to build the big stuff, the roads, the railways, the ports, the things that will last for decades. And if you look at this chart, you can see this isn't just some one-time thing. That number is actually a 9% jump from last year, and it's part of this really sharp upward trend in infrastructure spending we've been seeing. The whole point here is to fire up the economy, create a ton of jobs, and make the country more productive in the long run. So the big question is, where's all that cash going? Well, the budget lays out some seriously ambitious plans. We're talking about 7 new high-speed rail corridors connecting major cities, a 10,000 crore rupee investment to make India a global hub for biopharma, a brand new mission to design and make our own semiconductor chips. They're even pouring money into the so-called orange economy, that's animation and gaming, and building a girls' hostel in every single district to encourage more women to get into science and tech. Okay, so you hear all that, right? Big plans, big money, all focused on growth. Which brings us right back to where we started. Why on earth did the market freak out? Well, like it so often does, the devil was in the details, hidden away in the fine print. The first bombshell was for the traders, especially those who deal in the derivatives market. Now, this stuff gets complicated, but basically, they're betting on the future price of things. The budget took the tax on one very common type of this trading, futures trading, and more than doubled it. For anyone who trades regularly, that's a huge hit. It drives up their costs and cuts right into their bottom line. But the tax hike was one thing. The other, maybe even bigger issue was about something more fundamental: trust. For years, there was this simple, clear rule about sovereign gold bonds. The deal was, if you held them until they matured, you wouldn't have to pay any capital gains tax. Simple. But this budget, it changed that rule. And they didn't announce it from the rooftops. It was buried in the fine print. When you suddenly change a long-standing promise like that, it rattles people. It shakes their confidence. And so that's where we're left, with this central puzzle. On one hand, you have this big, ambitious plan for long-term growth, building out the country's infrastructure. But on the other hand, you have a budget that clearly spooked the market, maybe trading that short-term confidence for a bit more tax money. So which is it? A visionary roadmap or a missed opportunity? I guess that's the big question we'll all be watching to see answered. Thanks for tuning in.